Aloha, I'm Jordan Sonner, your Hawaii realtor. Today I'm hanging out up at my Volcano Tea Farm listing, and I wanted to do a quick video on what your mortgage payment includes. There are 4 main components to your mortgage payment, and that is principal, interest, taxes, and insurance. The first 2, principal and interest, are in a set amortization schedule. So when you sign your final documents at closing for your loan, there's going to be like 5 or 6 pages in that 50-60 page stack of things that you have to sign. That's your amortization schedule. It's going to go through all 360 of your payments if you're doing a fixed 30-year loan, and it's going to tell you exactly how much in each payment your interest and your principal is. So when you start off in the first few years of your loan, you're generally paying a considerable amount in interest rather than principal. That number does switch, that percentage does switch. Think of it kind of like a seesaw. So for the first part of your mortgage, you're paying more interest. The second part, you're paying more principal. The set dollar amount for your principal and interest payments will stay consistent over the life of your entire loan if you are getting a fixed rate loan. The amount that you pay to principal and interest is preset, but if you make any extra amount in payment every month or any month, then that goes directly to the principal balance, which then basically rebalances out your amortization schedule. So if you're paying an extra however many $100 a month, or an extra payment a year, basically all of that goes directly to your principal and it pays down that balance faster, which means that you'll end up owing less interest over the life of the loan. So if you have some room in your budget, I always recommend making extra payments to principal whenever you can. In another video in a little bit, I will do a topic on the 13th payment trick. So when I do post that, I'll put a link in here so you guys can reference it. The other 2 main components of your mortgage loan is going to be your property taxes and your homeowner's insurance. So both of these things are tied into your mortgage essentially as an insurance, a peace of mind for the bank that's giving you the loan. If they're paying your property taxes, they know that you're not becoming delinquent on your property taxes and that you're not going to have liens put against the property for taxes, or eventually have the county or state foreclose on your property because of back owed taxes. So it's insurance for them to make sure that you're paying it. It's same with your actual homeowner's insurance. They want to make sure that your policies are always current, because if something happens to your house after you've let a policy lapse, offhand, we live here in Hawaii. Let's say we have another eruption, or hurricane, or even just a house fire, anything. If your insurance policy is not up to date, then there's no insurance payout and the bank is still owed X amount of dollars and there's no way to pay it. These are the 2 things, the homeowner's insurance and the property taxes, that can cause your mortgage to fluctuate a little bit. So your payment won't be the exact same for 30 years. It will be close, but as the county increases your taxable assessed value, your property taxes will go up a little bit. On the other side of that, if you're not using it as a primary residence and then you change it to a primary residence later on, your taxes will go down, and your homeowner's insurance costs don't always stay the same either, especially in an accident and natural disaster prone area like Hawaii. We saw it in 2018 when Lloyd's of London pulled out of the market for lava zones 1 and 2, and HPIA came in and kind of swept up everybody that had lost their policies. But now those policies are 3 to 4 times what they used to be through Lloyd's or Lexington. So the homeowner's insurance part of it is something that you have the most control over, I guess, of the 4. You're allowed to go shop for new homeowner's insurance. You can change your insurance at any time as long as you have current insurance and you have the minimum acceptable coverage for the bank to give you the thumbs up. So that's all I have for what does my mortgage payment include. If you have any questions, leave a comment. If not, have a great day. Aloha.